Hey guys, hope everybody's doing okay. Today I got a big time growth ETF for you. Everybody knows, well, not everybody knows, but a lot of people have heard of the Nasdaq 100. The Nasdaq 100 is the index that the QYLD ETF writes options on. So that's probably where you've heard it from me. But the Nasdaq 100 is one of the best performing ETFs or best performing indexes of all time. And we're going to take a look at it. And the reason why I'm taking a look at it is because I am probably going to start a position in this very soon. And more details coming up on that one. So if you're new here, please like, share, subscribe. I go through a lot of ETF reviews. I do some closed-end funds. I got one coming up here soon that is interesting. I do covered call income strategies. I track a paper portfolio. I can link that down there below. I reveal my dividend income. That's coming up shortly as well. So stay tuned, like, share, subscribe, comment down below. Let me know you're new here. That would be awesome. Also, if you would like to, if you can actually, in the description below, there's an Amazon link. And if you complete a shopping session using that link down below, buying whatever it is that you normally buy, Amazon will give me a small commission on qualified purchases. And that is a great way to say thank you to me for doing these, and I would really appreciate it. And yeah, thank you very much. So let's get into it. Let's look at the QQQ. Yes, the triple Qs. And this is an Invesco QQQ Trust Series 1. It's an interesting name. There's a ton of information on this, and I'm just going to go over a real small portion of all the information that is out there on this index. But if you see it as a cap-weighted, non-leveraged, passively managed equity ETF with the benchmark index of the Nasdaq 100. Now, I'll just go over a brief overview of what the Nasdaq 100 is, and that's here provided by the Nasdaq, and it is the benchmark of the 21st century industrials. So what does that come to mind when you think of the 21st century industrials? So 20th century, we had big conglomerates and industrial companies that drove this country into growth. Car manufacturers, oil, materials, things like that. In the 21st century, what's driving that growth now? It's going to be innovation and disruption. So companies like Apple, Amazon, Xilinx, Intel, VeriSign. So bless you. Don't know if you heard that, but technology continues to evolve and become more efficient each day. Creating products or services which continue to be in demand is essential to surviving in today's competitive world. Technology is the driver of the economic engine, whether it is advancements in transportation, communication, media, medicine, and investments. The driver of growth and innovation is the power of technology, allowing for advancements in data analysis, testing, and decisions. The technology industrials are the new drivers of the industries. Businesses around the world will continue to demand and use these highly efficient products to keep pace with their competitors. And now it is technology that is keeping the new economic ecosystem safe. So pretty much everything that we do revolves around technology these days. Even stock investing. I mean, we're not calling up a broker saying, hey, buy me 100 shares of this or 100 shares of that. we're just clicking a button and clicking buy, entering our numbers, clicking buy. So a lot of technology is driving all kinds of different aspects of our world. So just go over a couple of I'll pick out some things. Today, Apple, Amazon, Intel, and Microsoft have become global leaders in the technology sector by helping create products which continue to be in high demand from consumers. From computers to cell phones, all of these products will continue to become more advanced in the future. From a social perspective, Facebook has become a quick and efficient way of interacting with friends around the globe. Starbucks also continues to improve its efficiency to customers by utilizing advanced technology. So apps and things of that nature, just, you can order on the app and just go pick it up. So, I mean, all these things are just changing our world. So we'll just go over a quick look of the composition. It has almost 140 billion in net assets, a 0.2% net expense ratio, has about a 0.5% yield, dividend yield, but we'll talk about that in a future slide here. And we'll take a look at the composition here, and we'll see it consists of 104 holdings. The top 10 has 57.81%. And the other 94 have 42%. Country exposure, 96% of these are in the United States, 1.5 in China, 1 in Germany, and a little bit in the Netherlands, Argentina, Israel, and the UK. 98% are large cap companies, 1.5 are mid cap companies. And Morningstar categorizes this as a large cap growth ETF. Now, this ETF excludes financials altogether. So there's going to be no financials here whatsoever. So we'll look at the top 10 here. Apple, almost 14%. Microsoft, over 11%. Amazon is almost 11%. Facebook at 4.5%. Google, actually, if you look at both classes of shares, has almost 7% of the fund, or actually over 7% of the fund. Tesla at 3.3%, Nvidia at 2.6%, Adobe at 2%, and PayPal just under 2%. So we'll look at the sector allocation. So this as a core holding would probably work, but you're going to be missing out on some sectors for sure. You're going to miss out on financials, you're going to miss out on energy, and you're going to miss out on real estate and materials. So 4 sectors are not represented in this index. We got information technology at 47.78%, communication services at just under 20%, consumer discretionary at a little over 19%, healthcare at almost 6.5%, consumer staples at about 4.5%, industrials at 1.7% roughly, and utilities at 0.60%. So we'll look at one of the things that people shy away from this is the dividend yield. They say, what's a 0.5%? Why am I going to invest in this? Well, if we look at the past, when did this go? Since 2003, this chart is about earnings, revenues, and dividends growing multiple times faster. So this is right here, the Nasdaq earnings since 2003. Now this only goes up to 2018, but you'll get the point. Since 2003, earnings has grown over 19 times in the Nasdaq 100, while the S&P 500 4 times. Revenues of the Nasdaq 100 has grown over 6 times since 2003, and the revenues in the S&P 500 has grown 2 times. Now this one is interesting. The dividends in the Nasdaq 100 since 2003 has grown over 40 times in that time period versus the S&P 500 3 times. So this is a dividend. The dividend is an afterthought, I think, in this ETF, but the growth is absolutely there. We'll look right here at the Invesco QQQ over at Seeking Alpha, and we'll look at the dividend growth rate. You'll see right now it pays 0.58%, $1.70 annual payout, with a growth rate of over 10 years of an impressive 22.35%, 10-year compounded annual growth rate in the dividend. That is pretty amazing. But you're not buying this for the dividend. You're buying this to participate in the technology that is driving this economy and that will probably continue driving this economy for many, many, many decades to come. And let's take a look at how QQQ performed in the past 10 years, because actually when QQQ first came out, it actually underperformed pretty bad, because from 2000 we had the dot-com bubble crash, 2008 we had the great financial recession, so it actually didn't perform very well. But since 2010, when technology really took off, we'll go here from August 29th, 2010 to August 29th of 2020, and we'll chart 10,000 invested. And we will see here that the QQQ had a total return of 644.14% with dividends reinvested versus the S&P's 307.36%. That gives you an average annual total return for QQQ of 22.22% versus the S&P's 15.08%. So the QQQ in the past 10 years, with tech being at the forefront of our economy, has really skyrocketed and surpassed the S&P in a big way. Now, is the QQQ overvalued at this point? Yeah, I think so, probably. But I thought it was overvalued for a long time. So as a long-term investor, where I'm going to be 10 plus years, I kind of don't mind starting a position now. And if we have pullbacks, adding and lowering my cost basis that way, because QQQ really doesn't give you very many entry points. And I'm not saying today is a great entry point, but QQQ just historically has not given you any great entry points, especially in the past 10 years. So, that's that. If you think tech is going to be the big boom for the next decade or more, or forever, QQQ might be where you want to be. Give me your thoughts down below. Let me know what you think. Like, share, subscribe, do all that good stuff. Also, use that Amazon link if you would, please. Hope you guys have a great day, and we'll talk to you later. Thanks. Bye-bye. I am not a financial advisor. The information contained in this video is for entertainment and informational purposes only. It is not intended to be investment advice. Please seek a licensed professional for any investment, tax, or legal advice. Thank you.